M&M numbers. Remember, the management was addressing the media. Listen in.
We do not want to. There is no intention of going further beyond this at this point. But it helps us understand this sector a lot better to enhance the value of a business that is nearly a 40,000 crore market cap business in this sector for us. Why RBL Bank? We saw an opportunity with a bank that was very well run, a very strong management team, a very good foundation, at a price to book that was lower than 1. It was a great investment opportunity from that standpoint that came together with our desire to understand this sector in banking a lot more. And that is the reason we've gone ahead and taken a 3.53% stake in this bank. At this stage, we do not expect to go higher. At some point in future, if there's a very compelling strategic reason, which we will have to understand in detail, evaluate in detail, in line with our capital allocation guidelines, we will look at it at that point in time. But today, that is where we are. Right? I think I've covered all the key points that we had here. Let me go further. Not just will it not change, we've in fact enhanced our discipline. And you will see that in our reporting numbers as well. There is no others category in what we report anymore. In the past, you would have seen others, and others sometimes tends to be a parking lot for things that we don't like. But there is no other category anymore. There's accountability. So every business has an owner, and that owner is accountable for that business. Not that that wasn't the case in the past, but it's just further enhanced at this point in time. Therefore, our segments will be auto, farm, and within services, financial services being greater than 10% for us is reported separately. And then we have the other services businesses, the industrial businesses, and consumer services. What you will also see going forward is further transparency within these segments. So in tractors, we've already started breaking out margins for core tractors and the overall farm segment. In auto, you'll start seeing a lot more transparency on the various different segments in auto. So that way, each segment is held accountable and each segment should be driving performance. What we've also done with exceptional items is consistent with accounting guidelines in the past. Impairments of investments were taken in exceptional items. But we've gone a step further. We said some of these impairments were based on management actions. So they should not be exceptional. We should take accountability for them. And we should be putting them in our core numbers. And similarly, where we create value, should be in our core numbers as well. So you will see a lot less of exceptional items in our numbers going forward, which is again to drive both transparency and accountability, further strengthening our capital allocation discipline. And this is something you're seeing for the first time now, because we want to start showing our results in auto, farm, and services. And this is a picture of a 3-year cash flow. We've talked about F22 to F24. We had shown it collectively in the past. We've now shown it separately for auto, farm, and services. And let me highlight a few things here. First is net cash generated. In F22, 23, and first quarter of F24, actual numbers.
Okay, with that, we're out of time on Midcap Radar. Your stocks when we return.